Good day everyone and welcome back to my channel. Today I've got a fresh update on how my mandatory provident fund portfolio performed in March. Global markets took a hit because of the conflicts in the Middle East and my portfolio definitely felt it. As of 31st March 2026, my Manulife MPF portfolio stood at around 1,036,000 Hong Kong dollars. Compared with the end of February, that's a drop of about $101.7 thousand. This represents an 8.9% decline for March. And yes, that makes it the biggest monthly loss I've seen in the past 3 years. It also fell more than the overall MPFR performance index, which was down 6.3% in March, according to MPF ratings. So with a gap of 266 basis points, March officially became the first month in 2026 where my MPF portfolio lagged the broader MPF market. But here's the good news. Thanks to the stronger performance in January and February, my first quarter year-to-date return is still slightly ahead of the MPFR index by 35 basis points. Now let's break down the month-end fund allocation and see which parts of the portfolio held up and which ones dragged things down. The Manulife China Value Fund weighting, for example, is still a wee bit above the original 45% target, so its performance basically moved in line with the overall portfolio. The fund lost 9.6% in March. That's worse than the average MPF Hong Kong and China equity category, but it still outperformed the other equity funds I hold. Meanwhile, the Manulife International Bond Fund dropped only 3.3%. It still underperformed its MPF bond peers, but compared with the equity funds in my portfolio, it held up much better. Because of that, its weighting is now 50 basis points above the original 10% target. Over the past 2 weeks, a few friends asked if I'm planning to switch funds or change my allocations. My answer is still no. Historically, Middle East conflicts tend to be short-lived, and while the March drawdown wasn't pleasant, this is part of managing a multi-asset MPF portfolio. Plus, China's equity market is trading at a price-to-earnings ratio of around 9.7 times, right around its 5-year average. Given that valuation, I still think it makes sense to keep a meaningful allocation to the China Value Fund. Let's see how things play out in April. Thanks for watching. See you next month.